And important. Okay, welcome everybody. Welcome to the Piponomics YouTube channel where we will trade live analysis that will be for Forex and cryptocurrency. And also, hopefully you pick up some of the fundamentals of trading and what does that mean and how to look at and analyze a chart. So I'm also at the same time, I'm going to put up I'm going to give you live trades. And then the next day, we're also going to go over and review some of those live trades that we're giving that today to see how they played out. So today I'm going to give you setups and you're going to have a lot of buy stocks, a lot of sell stocks, whatever presents itself. And then tomorrow we're going to go over what happened in today's analysis. So starting off, I like to have my whole chart of Forex and cryptocurrencies that I like to analyze on a daily basis. I'm going to do first, I'm clearing off of what we've done in the past, since you haven't learned anything with me as of yet. And I'm going to show you how I will start a chart off. Well, one, I bring back some of those dinosaur type of fundamentals that a lot of people are not really keen to or understand or use in their daily analysis, but I'm going to show you why they're still very important, just as important as they were all those years ago when they were created. And that one special type of pattern that I like to go over or indicator is the harmonics. The harmonics is something that a lot of people kind of, miss on, but it gives you so much information as far as like trend lines, halfway points, a good area of reflection. So as you see, from previous points, there has been some rejection around these areas. And so all we can do is assume that it's going to be the same rejection until it breaks out and then retests and then continues to go in the opposite direction. Okay. So now what I've done so far is all I did was box in my harmonic pattern. And I pretty much use my parallel channel. And I'm going to actually click on that because I want you to see some settings that a lot of people are not aware of because it's always so confusing. But if you go to your settings on your parallel channel, you really want to see into the future. You don't care about the now. You don't care about what happened before, not when it comes to harmonic patterns. You want to know, you want to predict what it could do in the future. And the higher the time frame, the better off you are in that prediction, because they're a little bit more, I guess when you go up the ladder, they're a little bit more predictive. They're not as, faulty, because, the market's going to throw in a few harmonic patterns every now and again, just to kind of throw you off, maybe to confuse you. Maybe it's not, it doesn't turn out the way that you think it will, just because you're looking at a smaller time frame, like a 1 minute, a 15-minute. Now, I most definitely still box those in just to see how it plays off, because if it doesn't stay within that perimeter of that parallel channel, of that harmonic pattern, then you can also still see that it's not going to play by the rules. It's going to reject. It's going to do that breakout and retest and then continue to go to the opposite direction that you're anticipating. So that's what I love about the parallel channel and the harmonic pattern put together. So as I did, I clicked on the settings, and then I wanted to just make sure, because I know the standard version when it comes to TradingView does not have this button click. So you want to click on extend right line. And then that's how you're going to get your futuristic, pattern here to see where exactly price wants to stay. You can also, assume, because it's going upward, that you're looking for more of an uptrend versus a downtrend. And then we can play from that point. So looking at the 4-hour, I also like to go up to the daily. The daily is more powerful than the 4-hour, but you can see as I clicked on the daily how small the 4-hour now becomes, right? So I also box in the daily harmonic pattern. I do the same. And sometimes you have to play around with it. So, honestly, this harmonic pattern, until we see 2 to 3 lines of a pattern forming where there's a rejection at the trend lines, you can assume that, hey, this is the correct way that it's supposed to look. So you see how I kind of adjusted that. I started off at the top, but all I'm doing is just blocking in the points. Every point, A, B, C, D, I'm just blocking it in and then making it fit within my parallel channel. My parallel channel is very highly important when it comes to my analysis, because it allows me to see, something that can happen and mess up my trading plan. Okay. And that's what you're obviously trying to predict. So that's just another area. I would say that it has a rejection point. So I'm not going to play a sale at this point until I see that breakout, retest, and then it continues to want to go downward. Okay. All right. So now that we got that out of the way, I'm going to move down where I do my daily analysis, which is on the 15-minute chart. 15-minute chart. So what am I doing? Well, one, on the 15-minute chart, I am very interested in, and we will have to go over what exponential indicators that I'm using in the future. But for now, the one thing that I want to show you is how I box in, or how I predict what direction the market is going in at any given time. So all I'm doing is boxing in the A range. The A range is the time frame from 6 p.m. previous day to 1 a.m. The current day. AM, that is. So during that time, the market actually tends to consolidate more than it actually is rising. Now, you will get a few exceptions where it's accelerating, it's rising, but for the most part, which is the shaded part, it's in one little area. It's not giving you much of a choice in which direction it wants to go. This is the worst time, the absolute worst time to play in the market, because one, your margins are going to be higher because your spread is bigger. Most people are off of work. This is the time that they actually can look and get in the market. So you're paying more money, and just to lose, because if I was to predict a buy in this situation, I'm getting maybe 1 or 2, 3 pips out of that. I mean, for some that might be enough, but your spread is going to cover at least 1 or 2 of those pips, and you're not going to come out with much. So, and it's not the best time. It's very, you'll be in a rough spot, more so than a good spot. So I tend to not be in the market during the 6 to 1 p.m. and because one, it's a part of my trading strategy, but then two, I will be, I use it to predict how many pips the pair that I'm trading is going to generate in a given session. So what do I mean by that? Well, one, I'm using this A range to predict how many pips will the before it changes direction. The trend will give me before it changes direction. Okay, hopefully I broke that down good enough. But basically, I'm predicting how many pips because it's giving me my A range, the average amount of pips that it moved within that 6 to 1 p.m. time frame. And then I'm using that as a box to predict predict the trend before it does a pullback. So I'm grabbing pips along the way based on if it has a if it's going upward, which is my buy stops, and or downward. You will rarely see me do a market execution. I have to be 100%. I have to be 100% sure that the market is going to go in that direction. And most of the time, I am predicting it because I do not like to chase the market. I had to learn that the hard way. But after I put a box above and a box below of that A range, I want to know. I use my Fibonacci a little bit different than most people. They use it to maybe to measure a trend, to measure maybe the pullback, but I'm measuring the boxes with my Fibonacci. And what do I do within that box? Well, one, I'm marking the 80% line. That 80% line would tell me, hey, this is actually going to continue to go. And that's where I'm looking to buy in at. And then I'm taking profit at the top of that box. Now, where do I put my stop loss? Well, I do it about negative 1.15. And then I'm also color coordinating so that I know exactly what move I'm looking for. So if I want to get really, really if I really want to break this down, I start to write myself little notes. The note that I will write here is entry upon close of candle over green line for a buy. Okay. So I'm watching the 15-minute chart to wait for a candle to close above that green line, which is my 80% of that box. Okay. And I'm going to say, I'm going to enter this based off of that one. Now, as you can see, if you look to the left, you can see a couple of indicators that say, what would you do in this situation? Well, this is a candle setup that most people are not aware of, but it's called the piercing candle. And that's like an immediate, it opens up with the direction that you're following, but then it immediately retracts that direction with another candle just to go the opposite direction. That is the move that the market will play on you. And you just have to be aware of that move. So where would I put my stop loss? Well, I have an immediate stop loss right here. That's if I'm playing with big bucks. And I know that I don't want it to run just in case it continues to run. And then it'd be an issue over time. But if I would have got into this, I would have set my stop loss here. And then I would still be in the green. But here's my TP. Okay. Here's my first TP. And because of what I'm using, as far as the program that I'm using on TradingView, which we'll be getting more into as we learn what it is that you're looking at, I'm able to predict, one, that this is strong resistance because resistance is on the top, right? And support is on the bottom. So this is strong resistance. So this will be an area that you will have to look for. And maybe you'll find that will have an engulfing candle if it really want to pushes up through that market. But then you also have to look around because remember in the beginning where we boxed in our harmonic pattern. Well, here's the bottom of that line. And look how it just rejected off of there. So you would think, so you can confirm that this is a valid trend line. So this is another area in which people can get psyched out at because they're following this trend, it reversed, it's going down. And you're like, oh, I can probably play this as a sale. But we already knew that there was some confluence there from the upper charts, the 4-hour chart and the daily chart, that this was an area of resistance, or in this case, support, because it is the bottom of the trend line or the bottom of the parallel channel, in which we boxed in that, in which we used to box in that harmonic pattern from the higher time frames. So you see it going, you see it going, you see it going, right? You see it going. So we can just set it. I would set this in my phone, and I will set it at 4115.212 as my TP. Now, next, most people are like, well, okay, once that's done, what would you do next? Well, one, I will duplicate and clone my box. I will stack it on top of the other. Okay. And then I will take out my measuring tool, which is my Fibonacci tool. I will take it from the bottom up because we're going up. I will measure that box, and then I will do the same color coordination. I will mark off my 80% of that box so that I know where my entry is at. Entry is green. My TPs are blue, so I will mark off where I will take my TP at. And then I will mark off where there's a good sale or where there's reversal. The reversal will take under here. And how would I play my reversals? Well, I will play that the same way I would play my entries with the green line. I will do the same with the red line. But first, in order to play a reversal, it has to go up and grab that 80%. Okay, so I want to see a wick there. I just want to see this line being captured. And then if it starts to reverse, I can play that line. I can play that entry as the candle closes over this red line. I could take it to a TP line, which is here at the next red line. So it's red line to red line is what I'll be playing in that situation. And that is one way of trading. It took some time. Now, I know a lot of people are probably still confused because I taught this method a few times and I go over it all the time. But what happens over time, as you look at the charts and as you play in the charts, as you get to know the charts, get familiar with the charts, become a doctor at the charts, mastery, right? You're going to be able to spot this type of this type of coordination that I'm able to do after years of training. I went through the academy, IM Academy, okay, which is how I became who I am, because I had access to over 100 educators. And if you want access yourself, you can also go and sign up. I will give you where to go. And basically, I offer flashcards for those that don't really have a lot of time to really work on their understanding, but to really get the terminology understood. I mean, it really starts you off from beginner, because I really feel as if there's a gap between the information that's out there. And then, because I know when I tried to learn on my own, I went through the YouTube process, and it was like I was falling into a rabbit hole that I thought myself chasing candlesticks and not really understanding why. So I have a great program under Piponomics.store. So that's www.piponomics.store. And you go to that website, you're able to get depending on what level you're at, if you're at beginners, if you're at intermediate, if you're at advanced, you're able to get a hold of a flashcard deck that will give you more understanding at the level that you're at. And then you're able to spot some of these changes and some of the verbiage that I've used so far in the training. And then from that point, you're able to join also the academy, so that you have access to educators that will help you grow your fundamentals, help you understand what you're looking at. You will get more, and then you can start from the beginning. right? Because there's educators who are good at teaching the fundamentals, the first parts. And then there's educators that will teach you high frequencies where you're doing binary options and you're making money by the minute, right? So Piponomics covers all of that. And again, just go to our store and you will be able to get your first pack today. All right. And with that said, let's talk about the next one. I'll give you one more, and I'm going to go over Bitcoin because Bitcoin is the talk of the season. Okay. Everybody wants to know what's happening at Bitcoin. And as you can see, I've been playing in that market as well. So remember what I was using these lines for. They're color coordinated so that I know where I want to get in and out of the market at. And so if I get rid of some of these, boom, 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 I'm able to further look and see what I'm going to do. It's the same process. I'm boxing in the 6 p.m. to 1 a.m. A range. I'm cloning that A range and stacking them one above as well as one below. Okay. Now I'm looking to see, okay, here we are. Those are my sons in the background. You really can't get away from them. So you have here my entry point. So if this closes, this candle, we're right at a great place. If it closes above that 80%, I'm going to be looking for a buy. If it rejects that 80% and comes and closes below this negative 1.15 area, I'm going to be looking for a sell. And keep in mind, we're coming up on an edge that may not complete this box because what our harmonic pattern has been boxed in is telling us a great resistance area. And anything past this is, I will start to reduce unless it's just really bullish that I see this continually run. I will start to reduce some of my risk at this point and maybe let some of it slide, but I'm not in a place where I like to see what happens at a resistance point because more than likely it's going to reject unless it doesn't. And so that prediction is hard to come by, but when all the facts is there, you play by what you have, and that's a fact. Okay. Now, if it does come up, it comes back down, resistance, it closed over this mark, I'm going to start looking for a sell. And so how do I predict the sell? Well, I come down, I start with my tool, my handy dandy Fibonacci tool. I start from the top, bring it down to the bottom, color coordinate or bring in a line to mark off my 80%. That 80% is going to be green because we like color coordination. And that negative 1.15 is going to be red. And so how would I play this? Well, it allows me to be versatile. It allows me to say, hey, if entry upon close of candle over green line for a buy. And then I'm also going to put in parentheses so I understand what I'm looking at is that there's a trend line, possible rejection. Okay. That's just to remind me, okay, that it will be short-lived. Then I also would like to, just in case I want to play a sale, which is all possible, I'm going to write entry upon close of candle over red line for a sell. Okay. And my TP is going to be this next red line. So I'm playing red line to red line. and a BTP. Okay. So this is just notes. And then tomorrow we will revisit to see if it actually plays out or how it plays out. I know it plays out. And then we will talk more about some more of the fundamentals, some more of the indicators that I use. Everybody, some people like to mark up their charts blindly, which means that it's just all candlesticks and stuff. I never understood that. I'm more of an analytical person, so I spent countless of hours trying to figure out how I can use it to my advantage, because they wouldn't be there if it wasn't something to it, right? So entry upon close of candle over green line will mark a sale. Because remember, it can continue to go. We're at the top of that mark and just might not be ready for it to come, to bust out yet. So it's going to retract a little bit, and I'm going to be here to be able to grab it all, just because I'm looking for it to happen, not just one directional. I think that's a mistake that a lot of people make. And here's my TP on that sale. And that'll be my second TP. Okay. Hopefully you learned something from it. And again, that website that I tell everybody to go to, which will give them a great understanding of what it is that I'm talking about. No .com, it's just .store. www.piponomics.store. That's the best place to go in order to get one. To start you with the beginner pack, if you know nothing, or if you know just a little bit, if you need to know more, based on where you're at in the market, you can move all the way up to the advanced, and then which is binary options is another level of expertise. And then we also even include cryptocurrency. So check out that website as soon as possible, and tell me what you think about it. I love to hear your feedback, and so that we both can grow, right? So talk to you guys later, and I hope you enjoyed it. Bye.